good morning, fellow traders, and welcome to today's Back to the Basics workshop session. We haven't had one of these sessions in a while, so I'm pretty excited about having this workshop, this session today. I know we're going to talk about some good stuff today, and we may not keep you in the room long. I know some of you guys have things you want to do over the weekend. And of course, we don't want to hold your weekend hostage. We want to just do a nice, good workshop or a session just to touch on some of the basics that we typically talk about in the Forex market and then send you on your way. But other than that, I guess we can begin in a little bit. What time is it now? It's about 9:19, and I was waiting for a little bit more people to come in, but I guess people may be busy for today. So with that said, I guess we can just move forward. I'll probably give it maybe a few seconds before we actually move forward. All right. So yeah, I guess it's about almost 9:20, which is 5 minutes from where we started. So then I guess we can get started. But yeah, good morning, Adam. Good morning, Robert. Good morning, Ron, and good morning, Danielle. Thank you guys for coming. All right. So with that said, let's move on. Let me first expand this screen right here, give us more space so that we can actually see what's going on. All right, so then let us begin. Now, before we touch on some of the good stuff, what we're going to do is quickly review some of the stuff that we've talked about before as far as the basics of the Forex market. And, you guys don't have to answer these questions if you don't want to. I'm going to throw out some stuff, but, it's for the sake of review and refreshing, just to get you guys refreshed on some of the stuff we've talked about in our prior Back to the Basic workshops, because I know we have people at all different types of levels. We have some beginners, and I know some of you guys have been with us for a while. So, of course, I want to really help everyone. All right. So with that said, let me ask you guys this quick question. Okay, what's the largest financial market in the world? Now, I know this is a simple question. We're just going to throw out this very, very, very basic question just to get us started, because it's very important for us to know this so that we can understand why we do what we do. So then what's the largest financial market in the world? Okay, yep. So then Ron said Forex market. Robert said Forex. So then, yes, you guys are correct. The Forex market is the largest market in the world. And per day, the volume is over $5 trillion. $5 trillion per day is traded through this market. That's the daily turnover. So then that's what you would call the daily turnover, and it's larger than the stock market. A lot of people think the stock market is the largest financial market in the world, and that's not the case. The New York Stock Exchange only trades, or the turnover per day is about 22.4 billion, which isn't a lot. We have billionaires that have more net worth than the New York Stock Exchange. So it just goes to show that, as far as the volume turnover, that's what I'm referring to. They don't have more money than the assets included in the New York Stock Exchange, but as far as the turnover per day, the transactions that take place per day, the volume is about 22.4 billion. No, 200 billion. No, yeah, 22.4 billion traded daily. Yeah, so then that's a 200 times difference, between what's traded in the New York Stock Exchange and what's traded in the foreign exchange market. The foreign exchange market, $5 trillion per day. New York Stock Exchange, 22.4 billion traded per day. So it just goes to show how massive the Forex market is in comparison to the New York Stock Exchange or to the stock market. Now, let me ask you guys this question. How many days per week is the Forex market open? Like, how many days per week is the market open? And I know this is a simple question because this is one reason why we do what we do. We focus on this particular market, but I guess no one's answering. So then I guess I'll answer that question for you. But as you guys know, just for the sake of time, I'm just going to hurry up and just answer this question. But we asked how many. Okay, yeah. So then some of you guys chimed in. You said 5 days per week, and just to jump into it, 24 hours per day. So then 24 hours per day, 5 days per week, which means that you have ample amount of time to make money in the market, even if you work a 9 to 5 job. Now, it will take sacrifice because there's only so many hours in a day that we have free where we can devote our time to trading the markets, because some of us work a 9 to 5 job. Some of us have children and families to tend to. So then you only have so many hours to really engage the market. So then the good thing about the Forex market is that it gives you the opportunity to at least devote maybe 2 to 3 hours per day looking at the markets and then making a judgment on what you should do as far as trading. So it's beneficial to your lifestyle. If you have a busy lifestyle, then you could probably squeeze in a few hours just to look at the charts, because the market is open 24 hours a day, 5 days a week. Now, of course, we talked before. Well, let me just say this. There's 8 major currencies in the Forex market. What are they? What are the 8 major currencies? And after we get done with that, then okay, well, yeah, just for the sake of time, I'm just going to say what they are, just for the sake of time, because I know we got quite a bit that we want to cover today, some new stuff. So then, for starters, we have the U.S. dollar. That's a major currency. So then we got the U.S. dollar, and then okay, yeah, I know, Adam, you gave currency pairs. But which is fine, because we know that all these currencies that we're about to list are grouped in pairs. But we got the Japanese yen, we got the euro, and we got, of course, the pound, as Adam mentioned in one of his pairs. We got the pound, and what else do we have? We have, of course, Swiss franc. But you guys get the point. If you're with us for a while, you would know. But so far we've listed 5. We have 3 more major currencies that we haven't listed. What are they? For those who are familiar. And let me give you a clue. They're connected to commodities. They're connected to the commodity space. 3 more currencies that are part of the 8 major currencies that's traded in the Forex market. So that we listed the US dollar, then we mentioned the Japanese yen, the euro, the British pound GBP, the Swiss franc CHF, and our next 3. Okay, we got the Aussie, we got the CAD, and we got one more. We got the Kiwi. Exactly. So then those are our 8 major currencies that we typically trade in the market, that are usually traded more often in the market. And as you guys know, those currencies are grouped into what is called currency pairs. So yeah. So then let's just move on. Okay, so then another question for those who may be new, and after we answer this question, then we're going to move on to some more technical stuff. But how many trading sessions are there per day in the market? We know there's the US session and European session. Those are 2 sessions. But how many sessions are there in total? I just gave you the US and the London session. Those are your 2 major sessions. But what other sessions, or how many sessions in total do we have? Okay, going once, going twice. Okay, well, for those who may not know, we have a total of 4 trading sessions. The first session is the Sydney session, and that's from around 5 p.m. Eastern to 2 a.m. Eastern. And then second one is the Asian or Tokyo session. That's from 7 p.m. to 4 a.m. Eastern. And then we have the European or London session, which is from 3 a.m. Eastern to 12 p.m. Eastern or noon Eastern. And then we have the US or New York session, which is from 8 a.m. Eastern to 5 p.m. Eastern. So then those are your major sessions, your 4 sessions throughout the day. And oftentimes, depending on your work schedule, you can find some level of activity in all of those sessions. But with that said, I guess we can move forward. and we can talk about what we're going to talk about today. I know it was a quick refresher on some of the really basic foundation when it comes to Forex trading. Yeah. Yeah. So then, yeah, we talked about that, and yeah, now what we can do is move on to some of the good stuff that we talked about earlier. Um, yeah, I know Marvin was telling me it was 200 billion traded per day, but
turnover.
Yeah, turnover. Are you sure per day?
Yeah, I looked it up, Melvin.
Okay, all right, because I could have sworn it was 22.4 billion
because the
traded per day.
valuation of all those companies are like 13 trillion, like the total valuation of all those companies, in the New York Stock Exchange. So the daily turnover, they said, is between 170 billion to 200 billion. That's the daily turnover, per day for the New York Stock Exchange. If you take into consideration all the different exchanges and indexes, that make up the U.S. Stock market. So it's about like close to 200 billion daily turnover. Whereas the Forex, just like we mentioned, is 5 trillion daily turnover. So of course you can still see that it's much larger than the U.S. stock market. But yeah, we're going to move on and continue, with the topic. So I know Melvin, he's going to continue sharing.
Yeah. So all right. So then today what we're going to talk about is something that we hinted on before, but we didn't really cover in much detail. And the last time we had our Back to the Basics session, we talked about support and resistance. We talked about how price responds around support and resistance. And we talked about the importance of the larger time frame support and resistance. That price typically responds, it's pretty much it's legitimate. Like the larger time frames, like the monthly, weekly, and daily are good time frames to really identify those key daily, monthly, weekly support and resistance levels. So today we're going to touch on something a little bit different. We talked about static levels because horizontal levels is what you would call a static level of support and resistance. So then let me describe what I mean. So then even in this chart right here, we see that there is what we call a static level, which means one particular price level throughout the whole chart, reflecting an area of structure. So then right around here, you could say this is what we would call a static level right around here, because we can see on multiple occasions historically, look left, you can see that this level or this area was respected. So then, this is on the weekly chart, but it's important to identify support and resistance. But that's what we call a static level of support and resistance. And we can see here that it operated as both support and resistance on multiple occasions. All right. So with that said, what we can do right now is actually start talking about what we've talked about to some degree, but not really heavily, which is dynamic levels. So then we're going to really talk about that and why you need to pay attention to them when it comes to trading the charts, especially if you're on the weekly and daily, because these dynamic levels typically hold, and they're really good on both the monthly, weekly, on all three, monthly, weekly, and daily levels. So what we're going to do, excuse me, is talk about dynamic levels right now. So then the first level we're going to talk about is trend lines. Okay. We're going to talk about trend lines. We're going to talk about how to trade trend lines. Now, one thing that we've mentioned before is that whenever price hits a particular support and resistance, you'll typically see some reaction, but you'll see it on a smaller time frame. And we'll talk about that later. But you're going to use the same logic and same principle even when it comes to dynamic levels. So then what we're going to do, we're just going to find a trend line that we can actually take advantage of. And let me just do this one right here. This is the weekly chart. We could probably find more on the daily, but there's a bunch of things we can do. Like even for instance, like let me just do this right here. Like right here, let me just draw this in. Like right here, we have this. Well, I wouldn't consider that a trend line. Okay, but we do have this right here where we have this boom, boom, boom. So we have 3 touches, right? So the minute you have these 3 touches, then you know that it's pretty reliable, right? The trend line is pretty reliable. So then when price hits there again, then you would definitely know to look for an opportunity to eventually look for your setup, right? So in this case right here, we see that price pushed up from this line. And then the minute it came right back to this line to retest this line again, you see that price shot up from there. It first did something, it consolidated, and then it shot up. But
Yeah.
you can see how that trend line was respected.
Yeah, but you can see how really a trend line helps to define what we've mentioned before, and even previous workshops when we talked about the ideal of trend and how markets are always trending. It's either creating higher highs and higher lows in this case, where we see this particular currency pair, which we know is the British pound Aussie dollar, move to the upside. And you can see that this trend line right here is actually a trend of the higher lows. You can see this low right here. This is a higher low, and this is another higher low than this low, and et cetera, et cetera. This is a higher low. And of course, this lets us know that it is trending to the upside. So trend lines are important when identifying directionality, when identifying the actual trend. Is it bullish? Is it bearish? Is it moving up? Is it moving down? Is it slightly sideways or consolidating? So then trend lines are important. And just like Melvin said, whenever price went back to this particular area, this support right here, this area of the trend line is served as support. And if you want to get more literal, dynamic support, because this support level changes with time. As price moves to the upside, as time progresses forward, you can see that the support level changes and it's forming these higher lows. So then that's the reason why it's important even for us to draw these trend lines, because they sort of can identify where maybe the swing points or where price may reach exhaustion or maybe getting ready to turn. But most importantly, they identify directionality. They let us know what is the main direction of the market. So then this is definitely, an important trend line, important technical indicator to plot on your chart, which are trend lines. And in this case, this is an ascending trend line support.
Yeah, a weekly ascending trend line support. And as we've been preaching for a while, remember the monthly, weekly, and daily trend line supports and trend line resistances are really reliable. And this is what we want you to do. We want you to actually start observing price behavior around these weekly, monthly, and daily trend lines. And what you'll typically see that the market typically responds quite well to these particular lines. So then let's say we can find something else. Yeah, we may have to go to another pair. Or let's just go a little bit in the past. Let's see what we see. Let me squeeze this down. We may have to go to the daily chart, but I'm not seeing too much right now. Well, yeah, I do see one, but I don't want to confuse you any. So, but yeah, here's one right here. Okay, so we see this right here. We see this trend line right here that's being formed. And what we can see is that, we have this ascending trend line support on the weekly, right? And we can see that whenever price made the third touch right here, then that's when okay, this trend line is likely reliable. So then, in other words, if we was to view this in real time, let's just say that after the third touch right here, this is when we're interested in this line. And we're going to look for opportunities to trade this whenever price makes the third touch. So then price is touching it, and we want to see it bounce from it and respect it. And as soon as it does, then now this trend line becomes reliable. Like, it's more reliable. If you see at least 3 touches from the origin, that's 1. Then the first touch, that's 2. And then another touch, that's 3. And if you see price react and respond to it at least 2 times after the origin of that move. So then, 3 touches, you could say. If you have 3 touches, then that's a reliable trend line. And you need to look for how price responds to the trend line right when you get a retest of it. So then on the fourth retest is where you're looking for a potential opportunity. So then you look, you wait, you see, okay. So then right here, right, this is when we get our test, right, of this trend line. We can move closer, and we can see that price actually responded with this candle right here, and it created a candle that we would call a doji candle, right? So this is on the weekly time frame. This is what we call a doji candle. So then what you can do from here, remember, what did we say typically happens whenever price hits support and resistance? What typically happens? Like, I know we said this in the beginning. Like, what happens? Well, okay, well, let me just say this. Okay, price typically slows down on a smaller time frame or it consolidates. So then what you would do, in any other case, you would go down to a smaller time frame and you'll look for your opportunity to buy. But let's just say that you don't. You want to stay on the trading time frame where this trend line is, because you could do that. Well, this is something that you can do. Just simply wait for price to maybe give us a bullish candle above this high right here of this candle. Once we get a higher high, higher close, you can enter a buy, something like that. Because this candle already reacted, we see that price may want to consolidate in this area. We can just wait for a bullish breakout of this high of this candle. So next candle, okay, right there. So yeah, it's almost, let me it's not quite there. It's not quite a break, but okay, so then right there, I know the weekly for the replay is kind of different. I think you had to hit multiple times, but yeah. So then, is this the close? I believe that, yeah, that's the close. So then right around here is where you would look for your buy. Right when price closes. This is just a simple way of just doing it. But you can wait for the buy right here, or you can wait for price to retest this pink line, which it did eventually later, and price could shoot up from there. But if you did enter, let's just say that you entered your buy. He's gonna make this quick, and you entered right at this pink line, or even if you entered above it, it doesn't really matter. But and you place your stop right behind this wick right here, and you can just see what happens. You go for at least maybe a 1.5 or something reward to risk, and you can see what happens from there. Okay, so price,
You see that it went back and touched
yeah,
the trend line, which really reveals how really this is a strong area of demand, that there's a lot of bids helping to prop prices in this exchange rate up. But you can see that it went back and sort of tested this zone a few times. And of course, let's continue to see what it would do. But you can see that it's honoring. It's honoring. Okay, it broke through slightly, but just like we said, like you may get those false breaks or those moves beyond it, but the key is whether it closes below the trend line in this particular case. And we see that it did, and it's still respecting the trend line. It's in this period of consolidation, you could say, and then it bounces and moves higher, because the longer the consolidation, the stronger the breakout. But so then you can see here that how even in this example, this particular trend line was respected. And one thing I wanted to point out about trend lines, which you have to do when you do your trend studies, your analysis, trend analysis studies, you have to look at also the angle of the trend line. Like in this case, it was angled in a certain way. So we knew that it wasn't a fresh impulsive move yet, because the impulse waves and the impulse moves are going to always have a sharper trend line. Like when you draw the trend line, it's going to be sharper. In areas where there's corrections, the trend line may be a little bit flatter, the angle, but it doesn't happen all the time. But in this case, we know that this was a period of consolidation. This is a period where the market was sort of in a corrective mode. After an impulse move, it was correcting, and we see that it started to break out to the upside and form a fresh new impulse to the upside, which will begin a new trend, and it would start a new as far as trend waves and a trend line would develop from there. But yeah, when you do your trend studies and you draw on your trend lines, you want to always assess what's the angle. Is it parabolic? Is it flat? In this case, it was sloping to the upside, but it wasn't as parabolic or
Yeah,
sharp
yeah,
move.
and what that tells you, like the slope of the line would tell you just the strength of that move in that particular direction. That's what it tells you. So then, in this case, you can see that price was still in a phase of consolidation to some degree, but we just got the breakout. And whenever you do trade the market, you have to be mindful of, just how steep that slope is of that trend line. But one thing I want to point out is that sometimes the price could be channeling, in between an ascending channel, where both the impulse and pullbacks are sort of equal almost in length, which is another topic that we discuss later. But we do have this trend line. This trend line has proven to be reliable. So then what you could do is say, okay, then the next time we get the pullback, I want to see price hit this trend line. But then, so we went over horizontal support and resistance as well. So then you can say, well, if price hits either this area or the trend line, and if it hits both, then that's great. But you can definitely look to buy if you get a pullback to this trend line or towards this trend line. So let's see what happens. So then we got this zone of horizontal support right now that we just drew in with this rectangle box. Remember, we want to buy at support and sell at resistance. We want to buy at support and sell at resistance. So then let's just see what happens. So price is going up, price is going up, price is going up. Okay, and now we want to see a retracement. And what we would like to see is a retracement to this particular area and possibly to this trend line. So let's see what happens. So then now we're in that area. If you wanted to, you can look for your buying opportunity. But yeah, and you can just wait for that confirmation. Okay, this is the weekly. Okay, so now we have this indecision candle. What you could do if you want to, you could literally just wait for price to break above this high if you want. So then in the same way we had this right here, you could do the same thing unless price makes a lower low or something like that. Okay, so then now we have to modify this. This is on the weekly. We may have to, let me delete this. We don't need this. We may have to do this on the daily because it's kind of hard to do this on the weekly. But yeah, okay, so now we have this push down to this trend line. So let's see what happens from there. Okay, so then right now we're still respecting this area. And if we get a break above this high, then that could be your trigger. So let's see what happens. Okay, and this could be it. Okay, I think this could be it. But yeah, right when you get the break and close above it, then you could enter your buy. And your stop could be somewhere, behind the wick, and you can target the next high or something like that. It's up to you. It depends on how risky you are. But yeah, so let's see what happens. So price pushes up, and as you guys know, it keeps going up. So then, yeah, this is the weekly ascending trend line support. And, we gave a few examples from the weekly chart. Now, let us just drop down and let us go to the daily chart and do the same thing. So then let's do that right now. We're going to go to the daily. Let's zoom out first. And let's choose a different pair. Yeah, I guess, yeah, we could choose a different pair. Yeah, so then let me ask you guys this question. I'll let you guys choose. What pair do you want to go to? It could be any of the majors. It could be minors. It can even be an exotic pair. But what type of currency pair do you want us to go to? And we can go to that one. We can just choose that one and review trend lines on that particular pair. Okay, so then I know Danielle said US dollar CAD. So then what we're going to do is go to the daily chart first. And we're going to go to the US dollar CAD. So then let's do that right now. Let's go to the US dollar CAD. All right. So right now we're looking at the US dollar CAD. What we can do is probably move this right here. All right. So then what we want to do is identify when the market is trending, when the market is trending in a particular direction or fashion. And, I do see one right here. Let me just do this right quick because, yeah, let's, yeah. So let's just do this one right here first. I'm going to okay, yeah, let's just do it from here. Do the replay tool. All right. All right. So right here we see this particular price action. And we know that price has been correcting lower. And for some of you guys that know this, the 20 simple moving average is sloping down. So then we're definitely in a bearish scenario. But what we want to do is see if we can get a trend line, a reliable trend line that we can draw. And right now we don't have that yet. What we do have is two cases where we see price test this particular trend line. What we want to see right now is if a third case will be made. And then from there, we can maybe modify and adjust our line. But we want to see if a third case can be made. So then what we're going to do is just correct, look for this to correct higher. Okay. And it looks like we have a reaction to this line right here. So then right when you see this reaction, then this is a reliable trend line. So now you can adjust it and you can prepare for price to retest this line again. So then you see price push down. And what we want to do is look for another retest of this line. And do we get it? Right there, right? So then we get this retest right here. What we can do is look for a selling opportunity, maybe down to this area of support. So because it's pretty apparent, we do have a daily structure support right here. And what you can do is simply wait for price to push lower. And we can zoom in to this area and simply wait for price to give us a lower low, lower close candle. And then see what happens from there. So then let's see what happens. So then price didn't give us a lower low, lower close candle yet. So now what we can do is readjust. And we got it right here. So then this was a strong move. If we can get a pullback back to this candle or even to this area right here, that'll be good. So do we get a pullback? No, we don't. We see price immediately slide lower right here. But it just goes to show that price does react to these levels. So then we missed out on this opportunity. Do we get another opportunity? Let's see. Okay, so price is going up. Price is going up. Okay, and we don't. Price immediately starts sliding down and it breaks this area of support. But we can see here how these trend lines are reliable lines and reliable levels. And what you guys can see, this is for, well, I don't want to confuse you guys anymore. There's a little bit more advanced stuff. But you see here the benefit of trend lines. And then I don't think we get a reaction up there anytime soon. But, that's that trend line. Let's see if we can find something else before we move on to the next topic. Okay. Okay, so yeah, we got one. Let's do this right here. Yeah. Okay. Let me do this replay too. Right here. Okay. So right here, I know it's kind of tricky. It's kind of hard to see this, but this is where we get 3 touches of a trend line from here to here, all the way up to here, right? So we got 3 touches. So then right now, what we want to see is for price to expand up and then retest this line. And if it does, then we'll be looking for a, buying opportunity in that line or on that line. So then let's see what happens. So then we see price respond to this area. And now what we want to see is a correction. Our price can either correct to this structure or correct to this line. So let's see what happens. What I'm going to do is draw in a box to identify the horizontal level and this particular trend line right here. So let's see what happens. So price is now testing structure. We can see that price reacted to it. So that can provide a good solid buying opportunity. But we see that price is consolidating now. Okay, so then this is when we get our first hit of the trend line right here. So then as soon as we see that hit, then what you can do is look for an opportunity to buy. And you can look for, like we said before, a higher high, higher close candle, even though this is a bullish candle right here. But if we zoom in, we can look for that. We can look for another candle to break and close above this candle. And do we get that? Yes, we do. And this is where it gets kind of tricky. I don't know if I would actually buy right here. I'll probably wait for a retracement, which is right here to this area. You get this retracement, I would probably buy right here. So if I was to go long, I'll look to buy here, place my stop maybe behind this trend line, and see what can happen, see where price could take us, maybe to these highs right around here, or do maybe a 127 fib, whatever. But let's see what happens. Okay, so then price is responding and it comes back up and boom, hits our area, hits the target, 1.4 reward to risk. And yeah, it's just that simple. But yeah, you can have a simple approach just like that, where you're just simply waiting for price to test the trend line, a strong trend line, either monthly, weekly, or daily, and then just wait for the reaction. So yeah, it's pretty simple, but yeah, that's how you trade, really, if you want to put it in simple terms. Now, what do you do when price breaks through a trend line, right? That's what we're going to talk about next. Like, how should you trade this if price breaks through a trend line to the opposite? We have this ascending trend line support. What do you do? Well, if you do have a break to the downside of an ascending trend line support, or any type of trend line support, that trend line support immediately becomes resistance. So then let's see if that happens here anytime. So then we have another test and price could push up from here. Let's see. Okay, so then now we have a break and violation of this trend line. So then right here is when this trend line now becomes resistance. And if we do get a push to this, a correction higher to this trend line, then that trend line will act as resistance now. But I don't think we get that. I think price keeps falling and keeps sliding higher. Well, we get the correction. Okay. And we may see price respond to this zone right here, this zone of horizontal resistance, because what was once support in many occasions will become resistance. Okay. So now now pushed up. Now it's testing the trend line right here. You see that? So it's testing the trend line. Now let's see if we get a reaction to this trend line. Okay, it seems like, okay. So yep, we did get a reaction. Price created this doji candle. We did get consolidation. Yeah, we did get a lower close candle. Now what you can do is enter a short. Now that same trend line became, resistance. So then let's see what happens on here. I know we placed our stop right behind this wick. Let's see if that's good enough. Sometimes we get a wick right back to target it. Okay, price immediately shot lower, and you can see that price fell back down. So then that's the power of using these trend lines. And we can see here that after the trend line was broken, to the downside, like a lot of people would say, oh, the trend line is broken, there's no use for it. But as we can see here, there was a use for that trend line. Price retraced all the way back up to where this trend line was, and then we've seen a strong sell-off. So then oftentimes you don't want to immediately erase your trend lines. You want to see if price could sometime in the future retest that trend line, even after it was broken. you know, because it still serves a purpose. Even when it's violated, the trend line can still serve a purpose later on.
Yeah. And, you know, and that's key because, you know, like areas where the market in the past may have considered it being support or resistance. You remember, price always follows and responds to prior history. And we can see here how even with this trend line, you know, for a period of time, it was respected. And I'm pretty sure there were other traders and companies and institutional banks and big, huge hedge funds that, you know, become part of the market making, you know, flow, price movement. But I'm pretty sure some of them may have still had this trend line in place and may have had orders automatically, you know, up here. But you always want to look structurally and look at, just like we say before, structure leaves clues. You want to always look structurally to your left to see if there's any reason to believe that this trend line will be respected. But in most cases, just like Melvin said, like although we see a violation, we still want to keep our trend line there. We don't want to remove it too quickly or make adjustments too quickly because, you know, price could very well pop back up to the same area. And sometimes what people do is once they get a violation, they begin to move their trend line down here and consider this the new low. But then then you miss out on all of this information up here from this original trend line that was respected for days and months. So yeah, so really trend lines are very important to your trading. It's very important to your technical analysis, and you can get a good idea of where you will see those turns and swings on a longer time frame, and even trade that even for your more smaller intraday setups. If you know those critical areas where market could respond to a trend line or respond to a static support or resistance level, you can use that information to even help you to figure out what's going on your day trading time frames. So then that's really the key. That's why we always encourage you guys to do the macro, you know, from top down analysis. Start from your larger monthly, weekly charts, daily charts, and then go down to your 4 hour, 1 hour, and then 15-minute chart. But you always want to, first of all, identify what the trend is, draw in your trend lines, do a study. How parabolic is the trend? Is the market respecting it multiple times? And if so, you want to maintain that trend line. It's almost as if like the more times it's respected, the more you would need to really keep it on your chart because you never know if price, when it returns back to that area, whether it honored again. So then you value trend lines based on how many times it's been respected. Like if it's been respected multiple times, there should be greater honor and greater priority placed on that trend line. And you should keep it on your chart because at some point when price comes back to that area, and especially if you see structural confluence, then that could be a good area to either sell or where you'll see some price activity.
Yeah. So then, so then that was a good example of what can happen when price breaks the trend line and then retest it. And then, you know, we look for a trade opportunity in the opposite direction because you'll see that happen often. You know, the market repeats the same thing over and over and over and over again. So then in this case, we see that. But if he was to move forward, do we see anything else? No, we see just price constantly push to the downside, which goes to show how important these violations of these trend lines are, because this ascending trend line shows that the trend was to the upside for the most part. The minute we get a violation of that trend line, now we're looking to go short. We're looking to sell, so then we can expect for there to be a nice trend line to the downside. I mean, a nice trending movement to the downside. And in this case, you could have really reaped a decent reward to risk. But of course, that's the purpose of trend lines. Let's do one more. Let's do one more. I know, well, I don't want to go ahead of myself, but let's see. Okay, this is the daily time frame. Okay, so then now this is one where it gets kind of tricky. So then, yeah, I definitely want to talk about this right here. It gets kind of tricky right here. So then let's do our replay tool. And all right. All right, so then we do have what appears to be a trend line. So let's draw that in right here. And really, whenever you draw a trend line, whether it's a ascending trend line, descending trend line, look to see if that trend line is forming something that we call a channel. So then what we can typically do from here is, of course, clone this line. So clone it and put it right at the lows right here. So that if price goes back down to this daily ascending trend lines, descending trend line support, which is really a daily descending channel support, then we can look for an opportunity to buy. And if price pushes back up to this trend line resistance, then we can look for an opportunity to sell. So then let's see what happens. I know this is the third touch. And if you want to, you can look for an opportunity to sell on the third touch if you want. And as you guys can see, price, I think, keeps going. And now it's testing, or of course it went near it, but it's tested this trend line support right here. Now it's not there perfectly, but it didn't touch it, but it's in the same vicinity or same area. If we was to move this a little bit higher, you can see that this area was tested. This trend line area was tested. So as soon as you see this bullish confirmation, what you can do is, if you want to, you don't have to, more riskier, you can trade this move to the upside. This is definitely more riskier, but it's an option. You can definitely do that. So then let's just say that we enter a buy here, place our stop behind this wick right here, and we're trying to target the highs. And of course, the reward to risk isn't that good. um that's something that we would definitely tell you about when you like, if you drop down to a smaller time frame, you can definitely get a better reward to risk. But I'm just using this as an example. So then let's see what happens. So then price pushes up from there, boom, hits our target, and right here is where price is responding to this upper resistance line. So then what we want to do right here, let's remove this, is see how price responds to this line. Because remember, daily, weekly, and monthly trend lines are very important. Now, could there be a break of this trend line? Absolutely. But let's see what happens. Okay, so now this is where it gets tricky, right? Because now we have a break of this trend line, right? So then we have a break of this trend line, and not just a break of this trend line, price just recently broke and closed above the high, the previous high that tested that trend line. So then in most of your cases, what you would do is simply wait for price to retrace and retest this trend line as support and then push up. But let's see what we can get from this. What I typically like to see is a bigger expansion beyond this level right here, a bigger expansion higher before we can conclude or even allow this trend line to be support. This former trend line resistance becoming support. Right now, we don't know what we're going to do. So then let's see what happens. So then price starts consolidating, and we get this move to the downside right now, this correction lower. So then we're not going to do anything. I'm not even going to buy here. I'm going to see what happens, because in this case, okay, so then now we have this strong move here. Now, what some people would do is buy here. And if they do buy, there's reasons for that. Like, you can actually buy if you want, if you see the bullish confirmation. But remember, it's still a bit more risky, but we can enter a buy. So let's see what happens. Let's see if we get a bullish reaction to this trend line. So let's see. Okay, so we did not get a bullish reaction to this trend line. Price went right back into this channel, this descending channel, and this channel may hold. This channel may hold as and we may see price slide lower. And oftentimes, whenever you do see that, then you got to pay attention to the trend lines again. So that, let's see what happens. When I'm thinking price may do something like this, where it retraces to either this horizontal structure, there could be another sell opportunity, or we could see something like this where price, let me just draw this in the blue line, could come back up, retest this trend line, and then fall lower. Because remember, this trend line could still be in play. So let's see what happens. If we do the replay tool, let's see. So then now we got this doji candle. Okay, so now we're seeing that we're retesting this trend line again. So then is there a possibility we could see a bearish reaction? Well, yeah, that's what we want to see. We want to see price react and fall. And it's quite possible that after this candle right here, we can see a slide lower, a nice push lower. But if we do get a break to the upside, then that means that this trend line was respected as support, and we could see a continued push to the upside. So let's see what happens. Okay, so now we're still created this bullish candle, and yeah, we could be on our way. Okay, so then look at what happened. So then price retested this area of resistance right here, this structure area to the left, and then now we're seeing a violation to the downside. You know, a push, not a violation, but a break to the downside. And what we can do here is either you can enter your sell now, right here, but your reward to risk won't be good. It'll be horrible. Or, and you can maybe target the lows down here. Or what you could do is just simply wait for another pullback with the next candle, wait for a pullback, and then have a better reward to risk. But let's see what happens. And your stop will be behind this wick. But let's see what happens. Okay, so then we did get the pullback, and then now price slid and fell lower. So then let's see what happens. Okay, yeah, we got stopped out there, but you know, as you can see, price did come down and test the lows. So there was a bit bearish reaction to this level. But with that said, all you're going to do is do the same thing over and over again. Like, you can have a trading strategy solely based on trend lines if you know how to trade the trend lines properly. So then that's one thing that we definitely wanted to emphasize today, was the importance of looking at your monthly trend lines, your weekly trend lines, and your daily trend lines, and finding trade opportunities around those trend lines. So that's it. And what I would like for you to do is just, you know, back test this for yourself. You know, go back in history, back test this, look for opportunities in the past, and you'll see that there's reliable opportunities that you can take advantage of and exploit. And if you focus on this one strategy alone, then you will have a positive expectancy, especially if you wait for confirmation. And especially if you use what we've been teaching for a while, as far as looking for consolidation on a smaller time frame. Because most of the time, whenever price hits these areas, these trend lines, you'll typically see consolidation. For instance, right here, in this case, let me just do this right quick. So then right here in this case, we see that price was consolidating, right? We see that price was consolidating, and most likely we see this consolidation a little bit better on the 4-hour time frame. So let's drop down to the 4-hour. And what we see on the 4-hour, we see what appears to be a double top type pattern. All we're going to do is wait for price to break, pull back, and see what happens from there. So then it's just that simple. You know, you wait for the break, price broke to the downside. Now we're looking for a correction or a pullback, and you know, we see that correction right here in this zone, and then from there, I think this is where price slid lower.
Yeah. But you can see here how, you know, even with, you know, trend lines, you know, they help to identify where resistance is. We saw this double top form in this trend line, but drawing trend lines it should be a major part of your technical analysis arsenal, your arsenal of tools and things you use to help get a better understanding of what this particular asset is doing, because we're studying the changes in price. We're studying how is price changing over time. Is it ascending? Is it descending? Is price increasing? Is it you know, what do you call it? You know, ascending or going higher, rallying, or is price tumbling and getting lower and lower and lower? And we do that through our price studies, our chart studies, and a major important tool to use often, really all the time, and every single day during your trading, you want to exercise or apply the use of these trend lines to not only determine direction and bias, but to also identify possible zones of dynamic support and resistance, because we can assure you that if this trend line was respected over a lengthy period of time, then in most cases you'll see some type of pattern, either topping pattern or bottoming pattern. Just like we saw here, we saw this topping pattern up here. And even down here, you'll see some type of bottoming pattern, but most likely you'll see some type of structural confirmation that prices is reversing and honoring these trend lines and these trend channels.
Yeah, like what you could do, you could look historically. We see topping right here. We see bottoming right here. What else do we see? Look here. We see topping right here. Price created this double top turtle soup, came down, corrected, and we saw price slide lower.
Something like
it's also a head and shoulders, but if you would waited for the, well, yeah, you probably could have got in and went down. But yeah, we see this all the time. Even right here on this trend line right here, we see consolidation, and price broke to the upside and then a pullback, which is a complex pullback, and then we see price go up. So then we see it all the time, consolidation around these dynamic levels of support and resistance, these trend lines. And that's how you need to trade these trend lines. You have to drop down to a smaller time frame and look for that consolidation, that topping and bottoming.
Yeah, when trying to, buy or sell around that dynamic support and resistance. The key is you want to go down to a smaller time frame for your confirmation, and just to get the trigger to confirm that it's honoring this these trend line, either the trend line support in this case or the trend line resistance. But yeah, so then really what we recommend you guys do when you open up your chart and you start for the day, after you've read through maybe the calendar and get an idea of what's coming out for that trading day, the first thing you want to do is you want to do your trend studies, and that will require you to draw in your trend lines. And you want to get more than 3 touches of a trend line. But if not, then you can still draw it in and hope that price.
Yeah, well, at least makes 3.
Yeah, but yeah, you want to always draw your trend line and see 3 touches. But even if one of your trend lines doesn't, and you still want to draw it in with the hope of that third touch coming, you can do that. Sort of like as a forecasting tool to sort of forecast where price could potentially go. But just keep in mind that even when you do that, that trend line doesn't become fully reliable yet until you get 3 specific touches on that trend line. And once you do, then you know for sure that this is a definite trend that this particular asset or instrument is honoring at that time. Just like in this case, like let's say we didn't have this prior price action and we just saw this double top or whatever the case may be, or we just had these 2 touches right here. Then and no price action back here. Let's say there's no price action, so forget all the I wish we could draw something to eliminate it. But let's say we didn't get a touch back up here, but we only had these 2 touches down here, that you could still draw in the trend line. And this could be like a forecasting tool of where price could potentially go, but it's not that defined yet until you get 3 unique touches.
Yeah. So then what we recommend is that as soon as you see 2 touches, you can draw in the trend line if you want. Like as soon as you see 2 touches, you can draw it. And then on that third touch, you can wait to see if there's a reaction to that level, that trend line. And if there is a reaction, then you can look to sell. That would be your third touch. And then every touch after that is more reliable. So then it's just ways for you to find different opportunities. But as soon as you see 2 touches, like, in this case right here, we have this first touch right here, second touch right here, which is, then we saw price slide lower. Right on this third touch, you could just be waiting for price to retest it and look for a selling opportunity right around there. But yeah, it's really that simple. But yeah, you can just start drawing out your trend lines after you see that second touch. Just draw it in as a forecasting tool to forecast where price could potentially go.
Yeah. So yeah, I guess we can just open it up for questions. If we don't have any questions, then we can probably just close out early for today, because really today's basic webinar was primarily about trend lines, drawing in your trend lines. You remember before we talked about what is a trend. In other workshops, we defined a trend as consistent higher highs, higher lows in an uptrend, or lower lows and lower highs in a downtrend. You want to see that type of pattern and that consistency of a pattern, and that is what defines a trend. that you don't just see it once, but you see it multiple times back to back, that consistent higher highs and higher lows. So then in your trend lines, you're just identifying that even more on a technical perspective basis. You're sort of identifying the swing points of a trend, and you're using that to sort of help you identify what could be good places to buy and what could be good places to sell. And then you draw your trend lines also to sort of identify the sharpness, directionality, and also where price, if it is trending, if it's forming a trend channel, how to walk the dog. I know we talked about that before, but whenever you see any type of channel forming, trend channel, and it oscillates back and forth between the resistance and support of that trend channel, then that's a trading term called walking the dog, where the dog is on a leash, but price is moving back and forth. When a dog walks on the sidewalks, it goes to the curb sometimes, sniffs around, and then it moves to the grass, sniffs in the grass, and it just moves back and forth from curb to grass, from curb to grass. And and that's pretty much what's happening when you trade. Price is moving back and forth between that, resistance and support, of those trend lines. So then you want to always draw your trend lines. That's probably one of the most important indicators after price itself, because remember the price action and price behavior, the higher highs and higher lows, that's the most important technical indicator to follow. But following that, is probably your trend lines and then your moving averages. Your trend lines and your moving averages.
Yeah, it's horizontal levels, then your support and resistance, your horizontal support and resistance levels, then your trend line levels, and then what's next is really your moving averages and your major key Fibonacci sweet spot zone area. Like if you focus your trading around those 4 different components, then you'll do fine. But here's just one example from just the monthly. I just wanted to draw this out on the US dollar Japanese yen because that's one of the harder pairs to trade. But this is just an example where you got 2 touches right here. And then what you could do, you could see that we have a touch right here. It seems like it may want to form a channel. So then you can clone it. And now you have what you can call a channel, right? So then, when price pushes up to this area again, you would look to,
or if it pushes down.
Yeah, or if it pushes down. This is the monthly chart. So it's going to be for a while. Okay. So then, yeah. So you can see that price did respond to that level. But yeah, and then
it sort of responded to the trend line at the bottom.
Yeah, it's sort of responding. But then if you get another retest, okay, yeah. Okay, yeah, this is taking a long time.
Maybe go down to the weekly.
Yeah, we can probably go down to the weekly and do this from the weekly. But sometimes that's where you find your topping and bottoming patterns. Let me go back to the monthly. And with these trend lines, we're gonna make them visible on the weekly. Okay, then let's go to the weekly. Yeah, because sometimes right around here is where you get our topping, our bottoming patterns on the weekly, since this is a monthly time frame. But we can see here that we do see what appears to be a potential double top right here. And really what we see is really a head and shoulders, left shoulder, head, and the right shoulder, where the right shoulder is creating this double top. So from here, what you could do is just simply wait for the retracement, and then do it that way. Just wait for the retracement. In this case, we get it like right around there. Well, we don't see it yet. But yeah, from here, yeah, this is where we get the retracement and price slides lower. So yeah, but yeah, like the point is this is that you'll typically see this happen for every time frame, but pay attention to your monthly, weekly, and daily trend lines. They really do work. All right. So yeah, that's it. That's just something I wanted to share. and it can bring clarity to something that may be showing a level of ambiguity. Like the US dollar Japanese yen, it can be kind of difficult to trade, especially now. But if you actually plot your larger time frame support and resistance levels and look at everything from a larger perspective, it can help you figure out what to do on a smaller time frame, like the 4 hour or 1 hour, where you're placing most of your trades. But yeah, that's pretty much it. I don't want to hold you guys for too long. I hope this was a little bit helpful for you guys. Remember, this is back to the basics. What we want to do is rehash the basics. And then we also want to ask if there's any questions. We want to help you guys. So if there's anything that you want to talk about, then you can definitely do that. But if not, then we're good to go. We can just close out early and end from there. Okay, so I guess we can maybe close out. Thanks, Ron, for coming. We really do appreciate you. Thanks, Danielle. And we hope it was helpful. But that's it, guys. We're not going to hold you too long. We only been here about a little over an hour. And as we mentioned in the beginning, we weren't going to hold you guys for too long. So then that's that. Thank you guys so much for coming. And until we meet again, remember to always count your blessings, not your pips. And we would definitely talk to you guys soon. Stay blessed, stay encouraged, and we'll see you soon. Most likely on Monday. All right. Talk to you later. All right. Ken and bye.